All right. Happy lazy Sunday. Hopefully it is for you all. Thanks for tuning in. This is week 13, believe it or not. And, don't forget to like, share, subscribe, and, tell your friends. We're going to talk about some cool stuff. Michael, what are we going to talk about?
Tell your friends, tell your grandma, get everyone in here. We've got a couple news articles. I'll go over them briefly and then we'll dig into them. So first one, we have to talk about DJT and what happened yesterday. I'm going to leave that to my American co-host because it's Canadian. I don't follow any of this stuff. We're also going to talk about NVIDIA and why it makes sense to not follow upgrades, because that's a pretty good chart right there. And then I'm actually going to talk a little bit about an indicator that we learn about in the CMT about when the boat might be a little bit too loaded. Just like we're seeing with NVIDIA, we may be seeing that with the Ozempic plays. So we'll go over that a little bit later. So, Steve, let's get started here
Also,
with, yeah, go ahead.
also, I think we have some chart requests, so maybe you dig those up while I'm speaking. I'm going to save
Absolutely.
those for last.
Yeah, I'll
Yeah.
grab those and you can go over with what happened here on DJT in the meantime.
Well, headlines, that's what we talk about, right? Here in the US, the big headline is the New York trial. Whatever you want to think about it is one thing, but we look at charts, and it was an interesting reaction yesterday. Go ahead and put up a 15-minute chart. The reaction after market yesterday was initially very strong. Excuse me. It was a initial move down to about where the lows of today's pre-market were, and then it spiked way up, and it gapped up this morning. Was trading above 55 actually in pre-market. That works. Thank you. And you know what we're trying to do is make sense of headlines, but use the charts to explain, what it is we're really looking at. Um, I can't stand those pre-market, post-market lines.
I'll take them off
Um,
in a second here.
we'll just,
There we go.
cut to the chase here. I mean, a lot of people have been watching this trial, if you want to call it that, and I was very curious to see how the stock would react. And I found it really curious that it did gap up early in the morning and could not hold that gap, which just tells me there was probably a lot of people that just said, get me out, market sell order. They didn't get a chance to get out yesterday in pre-market and they wanted out. But I want to bring up a technical point, and then when Michael gets rid of those pre and post market, maybe some of you saw the recent video that was emailed out this week. I talked about something called the pinch play, and it always just kind of gives me an internal temperature gauge, if you will, of how the stock is doing on a 15-minute chart. Zoom in just a little bit more for my liking. And then you can see the initial gap up was just enormous. And what the pinch play does is it takes advantage of two simple moving averages. And this is really Michael's copying my 15-minute chart. The 10 SMA is in blue. It's a faster line and it holds down the momentum. Whereas that reddish line is the 5-day moving average using 130 SMA periods. For those that don't know, 130 will divide perfectly into 5 days. So rather than looking at it on a congested daily chart, I like to get a feel for how the stock's feeling. We're getting a really good impression here in real time. Now, again, we're filming this midday on Friday. I don't know how the stock is going to resolve, but I'm going to say this: it's back under pressure. All right. I was kind of. I actually bought some yesterday after market. I watched it spike down, and I said, I think this is going to be a knee-jerk reaction. That's my side. That's how I see all this, and I think the chart's just going to kind of play out because an interesting note. After the verdict was read, apparently his donation site for campaign donations had a 404. So that just kind of tells you one thing: people were just rushing to an initial reaction for, at least on the campaign side. But we're here to look at charts. So back to the 15-minute chart. The pinch play is where the price gets cornered in between that triangle, and it can resolve one of two ways. If it resolves upward, then the bulls are going to be happy. And when I say resolve, I mean the closing candle, the first closing candle. So what do we have? We have a first closing candle that is resolving to the downside. And since that's happened here 45 minutes later, you see we can't get back above that 5-day moving average. So there seems to be a lot of residual get me out until, we figure out what's going on. Honestly, I thought it would be down a bit more. It's down 7%. could be a lot worse. We're close to lows. I wouldn't be surprised if it actually tries to take out lows. And for those that are curious, I do have a stop in there to basically kind of flat the trade. I have kind of a free look from yesterday. So I was real curious to see what the stock was going to do on the open. Had zero follow through whatsoever. So that kind of just tells me the thin market after hours kind of drove the price higher so that some people could get out at a higher price on the open. This is just half of day one. We'll see how it resolves. But I'm going to have another example coming up soon on this pinch play and how I'm using it. So for the moment, DJT is under pressure midday. We'll see how it resolves by the end of the day.
Yeah, and again, from the headline side of things, I don't know anything about it, but I will just say that, at the end of the day, and I know there's some people that are flocking to this as a sentiment vehicle for Trump and how he's doing and all of that. From my point of view, and Steve is certainly welcome to disagree, please don't do that because you have to separate these two things. I don't care if you want to donate a whole bunch of money to Donald Trump to win the presidency, and you do that through his website. But take the money that you have for trading and trade with it. So Steve was talking about how he's got, he bought some on the overreaction. He's already got a stop loss. He's leaving his
Plan.
emotions out of this because this will only benefit the stock price only benefits someone when they sell, right? So if and then if you have the not the CEO but the face of the company, I guess, selling stock, that's not going to be good for the company either. So if the price rallies and that he uses that opportunity to raise money for his campaign by selling stock, then he's selling it to retail, and that's not good. So that doesn't help out either. It's the same as I kind of react every time you see one of these little tiny penny stocks that you've never heard of saying it's the short float or the shorter people that are keeping us down. I'm like, well, no, it's not, because the stock price only matters if you have to raise money. That's the only time it matters, or if an insider wants to sell, or if the company needs to raise money. Other than that, it shouldn't matter. So, I just implore you. I see it no differently from people who, oh, what was that called when people would only invest in things that they socially agreed with when it came to there's like these ETFs around it. I forget there's an
Yeah.
acronym. Basically, people wouldn't buy gas stocks because they thought it was ruining the environment. I see this no differently from that, right? My job is to come in and to look for charts to make money off. And I don't care if it's, the dirtiest oil company in the world or the cleanest solar company in the world, or whether it's someone I agree with or disagree with. Just, again, try to keep those separate. Come in, have a trading plan, trade, and then when you're done, go out and do whatever you want from a political or social justice or whatever it is you want to do, right? Just try to keep those two things separately because it's not going to matter. The company's going to make money, price is going to go higher, company's going to lose money, price will go lower, right? That's my opinion anyway. Anything to add, Steve, before we go to
No,
what
I
happened?
would just, I would love to see the stock go higher on two accounts, one for me and one for him. But if it doesn't, I'm not going to get married to it. I have a plan. I'm out.
That's it. Always have a plan. So now, of all times, we have Zach's coming in with a big upgrade to strong buy on Nvidia. Not but when Nvidia was 500, not when it was 250, not when it was a 100. It is a strong buy now that it topped out at it's like $1,200 a share. So this is something, and I remember doing this back when I was a big day trader back in the day, is going and looking at these upgrades and downgrades, but not to follow them to any respects, to kind of have these guys are usually wrong. I should probably take the other side of it. So if we go in now to NVIDIA, we can show you why me and Steve find this so funny because you're at the end potentially of the move for now. So, right, you're not going to upgrade the stock when it's down here, and you're not going to when 150, and you're not going to upgrade the stock when it's breaking out of this nice base at 500, and you're not even going to upgrade it when it's breaking into this base at 1,000. You're going to pick way up here, super extended. That's when they put in a strong buy, and there are people out there that'll just go buy the stock based off of that. And this is why we kind of made this podcast and why we talk about everything that we do is that there's nothing wrong with looking at upgrades and downgrades and looking through the stocks. And maybe there's some you agree with, maybe there's some you disagree with. But at the end of the day, you're talking price. This thing has, you know, quintupled over the last year. If it were to get cut in half from here. I'm not saying it will, but if it was, still a great performing stock at $500 a share. So I just think that this is just absolutely ludicrous that they're going to upgrade it at this time. Seems like this might be some exit liquidity for maybe some buddies of Zach's. Not gonna not gonna say anything too much there, but right, I don't think Steve's going to disagree with me at all. It's just too late. But if you like the stock and this pullback might be a godsend, right? You might get a pullback, you might get a lower base, you might get a trade from there. But this was the day on the open. So actually, because the article was from yesterday's open, so there was within like $10 of the high on this $1,200 stock. Just insane.
Why don't you put up a weekly chart since we're probably close to half a day away from it? If it closes anything like this, you're going to see a
Ooh, yeah.
disgustingly ugly topping tail. Now you held back. I'm not going to hold back. I find analysts to be probably the most useless creatures in the ecosystem of Wall Street. Their job is to herd the masses into the gaping orders of the institutions and the big boys. They're on a different floor at Goldman, and they receive their orders, and they're a little bit more, Goldman and other firms, they're a little bit more discreet in how they do it, I would say. I'm going to call out Zach's. I looked them up. You can subscribe to these people. They're probably so focused on retail facing that they are the perfect example to speak to why retail always winds up holding the bag. I
Mhm.
mean, literally, if you're subscribing to Zach's and they're giving you upgrades after the stock has run infinitesimally, the numbers that Michael just gave, I can't even recall because they're so insane. You got to ask yourself, what am I paying for? Steve and Michael are here telling you this weekly chart is blown off, it's extended, and it's literally the only thing that's been holding this market up. And once NVIDIA
Yeah.
rolled over, let's bring up the intraday and bring up another example of the pinch play.
Yeah,
Once
and this
NVIDIA broke its pinch, it was over. The market just really fell out of bed. And there it is. There was the bounce kind of yesterday and then opened up at the high end of the pinch today and then really just went through that pinch like butter, gave us our signal candle, and we have not looked back since. So you can use this type of scenario for many situations to either establish a short, to get out of a long, to go to the sidelines. But that's your signal candle, guys. And I've been doing this. I've tried to add it up probably 40 to 50,000 hours of staring at charts. And I'm a visual oriented person. And this is what I've come up with. This is a fork in the road that I find very interesting. And regardless of your position or your lookout on the market, it's going to give you some good information in real time. And in this case, NVIDIA broke and the market hasn't looked back since.
No, and I really like this play too because I think the rules get pretty simple, and for me, my whole trading is about making things as simple as possible in some sort of trend following nature. So the way I would look at this, and I don't know if you do it a little different, Steve, is you've got your entry trigger right there on the close of the candle, and then you just, because you're using your 10 SMA as that resistance point, and you're sticking with it. And
That's
if
your
this
guide. That's
yeah,
your
and
guiding hand.
if we go out to say it closes weak and then we go back out to that weekly chart, if you just wanted to use Steve's 10 SMA, maybe that's what happens here. Maybe we're going to get a
Day and a half.
pull back into
Hmm.
it, right? Maybe we're going to, because if you look at this on, this 10-week SMA, this has been your guide kind of through all of NVIDIA's life here. You had a pullback kind of happen right there before that first pop. While it's just chopping back and forth, you're staying out, but right before the breakout, and it's hugging right underneath that
Hmm.
10 SMA, breaks out. If you stay out on this time right here and then get back in when it breaks. So
Yeah,
yeah,
exactly.
I like these, again, just because, not because I think there's any overall magic to this particular moving average. Some people say, why not an ADMA, and you'll get roughly a lot of the same things from it. But when you're consistent with something, and I say this all the time, I don't think it matters what indicator you pick. It matters if you are consistent with that indicator so you learn it, right? There was Andrew Caldwell was famous for RSI. They actually end up calling him Dr. RSI, but I think that's actually somewhere on his tombstone now. Rest in peace. And he used RSI and he managed money with it and he did fantastically. I don't think it's because RSI is magical. I think it's because, like Steve was
It
saying about,
worked with his method.
and he
Yeah.
spent so much time staring at charts and comparing it to how the RSI works that he would would do that. Steve uses 10 SMA and Brian Shannon uses anchored VWAP, and whatever it is you end up doing, as long as that's your focus, then I think you'll end up doing great with it, just because you know the ins and outs of how that works.
He's the one that showed me the 5-day 130 trick, and that's been one of the best things I've ever gleaned from Brian.
Yeah, that's from his first book, which is like probably 20
Yeah,
years old
yeah.
at this point. Yeah. So again, I don't, there's people who look at gap fills maybe in this case, right? If we were to get back down to this area right here that I've drawn out, I think that's the area right now
That's
that I would be
reasonable.
watching, right? We pull back to
Hmm.
that price, and then maybe if we start to see some good price action there, you could look to get involved. I'm more interested in what Nvidia is going to have to do with the semiconductor index as a whole, right? Because if we look at it, this has been the semiconductors have been underperforming. So that means Nvidia has been holding up the semiconductor space where everything else, more garbage stocks like Intel, poor Intel, uh, has been weighing down the semiconductor index. So if the leader rolls over and all of the laggards were underperforming, then I think that could be a bad thing, because what you want to see in bull markets is you want to see the leaders go. They always start in bull markets, but then they pull up kind of the rest of the pack. Where in this case, it seems like the rest of that pack wasn't really catching up, at least for this last couple weeks. And then when it falls over, then if you have that leader falling over, then you could have the markets falling over as well. And I just want to talk about this just briefly. The Dow told us. So I was on CNBC 2 weeks ago talking about this Dow divergence, about how the Dow was breaking down at the same time the S&P and the QQQs were rallying, and the Dow fell apart first, and then we had now the SPY kind of following that. So just don't ignore Papa Dow. I know he's out of fashion now that technology and everything's cool, but keep an eye out there as well. So, and I think, again, if you're starting to see upgrades on a stock that's up, I think the moral of the story, if your stock's up 3,000% over the last 5 years and then the upgrades come in, might be time to feed the ducks a little bit, right? Now,
Yep.
speaking of these fades, I wanted to talk just a little bit here about something that we learned in the CMT and that I think may be going on right now. So I'm bringing up the chart of BTU, this is Peabody Energy, this is coal mining, and because I want to talk about coal. Now, I can't talk about a coal ETF because there is none. And the last coal ETF got delisted right at the end of 2020, right there. And then this is a coal company, and this is kind of what's happened since then. Now, I'm not talking about coal for this. I'm talking about Ozempic, but I wanted just to show that there are many examples you can go through histories of, ExxonMobil was taken out of the Dow and replaced with Salesforce right at the lows of ExxonMobil and right near the highs of Salesforce. And, this coal ETF was delisted right at the low price of coal. You see this happen all the time. Now, you take that, and I don't know if there's going to be any predictive power to South Park, but we had this whole South Park episode 2 on Ozempic at the same time that we now have an Ozempic ETF. And you can see so far this thing was listed right at the highs. So this just has a basket of companies that are working on this GLP-1 thing. So Novo Nordisk, Eli Lilly, I'm sure all the big guys will get it eventually. But notice that this has been listed, and so far it's been listed right at the highs. And again, we talked about this with the magazine cover back in the day about how by the time all of the mechanics of I need to open an ETF, I need to list that with the SEC, I need to fill out the documents, I need to get the investors fund, I need to do, by the time all of this has occurred and you see an event like this, quite often it may be a sell the news event. So, not really a revision to the mean trader myself. But when I look at some of these, here's NVO struggling at these highs right here. Could be a little potential cup, but struggling at those highs anyways. And then I look at Eli Lilly, which are the two major players in this, LLY. Yes, it's broken out to new highs, but look at all the topping tails in the candles here as well. So I'm going to be eyeing these over the next handful of days for actually failures at these prior highs. And that's why I brought up that chart of the Dow earlier, where you can see it broke the prior highs, spent a little bit of time above there, but couldn't get going and then fell. That's the trade I think I'm going to look for on these Eli Lilly and Novo Nordisk, and do some sort of long-term put options or something like that to maybe take a short on these trades for the same reason that Nvidia is pulling back. It's a theme. Maybe the theme's overdone. What do you think, Steve?
No, I think the semis have basically dragged the entire market kicking and screaming higher, and at some point that's going to give, and it feels like we're close. And so, end of the day, if that weekly candle holds on Nvidia, I would be looking to be extremely bearish and certainly not long and holding semiconductors. They're due
So
for a
would you,
correction, in my opinion. In
so
semiconductors, you're
are
speaking
we,
about Lilly, though.
yeah, but are we going to tease? Have you ever thought of, I don't know if you've
Oh,
ever done this on the trade of the week, but
uh,
so this is
no.
NVDS. I don't even know if you knew this was a thing, but this
Oh,
is
man.
1.25
Now
bear
you are teasing me.
single stock ETF. So do we just buy the potential weekly hammer right down there? Because again, not only are you able to then take that, because just I think you do as well, but I trade a lot in my retirement type accounts, which means I'm not allowed to do a lot of shorting. I can buy puts or I can do inverse ETFs. I don't know if there's ever been a trade of the week that was a single stock ETF
I
before, has there?
No, not a single stock. I've done SDSs before, but never a single stock ETF like Tesla Q or whatever that one other one is, or NVDS.
That might be a good one. Maybe. Well,
I wrote it down. I wrote it down. It's
Steve
on the short list.
Steve needs some time to mull it over, but that's the same kind of thing I'm thinking that just like we're seeing upgrades on Nvidia near the top, maybe we're seeing the launch of this Ozempic ETF and then South Park making fun of it and all of this. It again, it's the same thing that we go over time and time again on this podcast, that by the time things have become
Mm,
mainstream, the traders have seen the price action, notice the price action, take the trade, and they see it become mainstream and they're looking to sell. That's what the institutions do. That's what the professional traders do. The amateur trader doesn't look beyond the headlines. They just look at the headline and then take the trade. And then normally it's too late. And that's why
yeah, and
we
that's
think a
why
lot of
I
people fail.
mentioned earlier. And that's why I mentioned earlier that the analysts can be so insidious. A new investor comes in and they think they're just supposed to pull up these people that know what they're talking about and follow their lead, and they're
Mm-mm.
being herded into the slaughterhouse.
Yeah. And again, that's why we have trade ideas, right? What we want to do with trade ideas and why we built it and why we designed it like that is because I want to be able to see my setups in real time so I can take my trades with good entries and good stop losses and then kind of let the trades work and then not listen to some guy who, started researching Nvidia 6 months ago and then it took him 4 weeks to write the article and then it had to go to a boss that then got approved, and by the time
And then you got the email from above to pull the trigger because it was time because the
yeah.
premium clients needed to get out.
Yeah, so maybe stay tuned for maybe the first inverse ETF. There's a whole bunch of these that are actually, that might be a topic for another day. I don't know what I think of
Sure, we'll
all
save that.
these uh, and these single stock ETFs on popular names. It feels like a recipe for disaster, but I don't really know how. Just I need to think about that a little more. So you mentioned chart requests, and I
Yeah.
see two
Who do we
here.
have?
So one
Okay.
is BRCC. And this is
Okay. I
I like
think I
let's
mentioned, I think I commented to that one earlier that it needed to hold that 10 SMA line. And when Michael brings up his chart, it did that. It did exactly what my reply was to you earlier in the week.
is
And
that
here
right
we
there?
are again. We're pulling. Yeah, yeah. He or she, I don't recall, was in that consolidation. And I said, just need to keep the closing candles above that line, and you got
Hmm.
another boost. Now, for me, if I was a short-term swing trader on that second day boost, that second green candle up there, that's why I like the day and a half time frame. You get one big green day, then you get a lot of follow through. But I don't try to stick around too long. I try to use that as my day to exit for a nice swing trade.
Yeah, and the that 10 SMA that Steve trades with, that lines up with one of my favorite setups. I love to see something break out of a pretty clear level If it comes back and then holds and then moves higher, it just means that the people who shorted there use their opportunity there to cover that short for a break even. Also means that people who missed the boat on this breakout, they use that opportunity to buy back in. So you get a lot of that kind of psychology conversion if you can get that move done. I looked at what they did and they sold coffee. So big plus
Interesting.
for them there.
I was going to say that anytime I see that yellow stripe with a gap that holds, that means the earnings were solid and it hasn't looked back. So that's another good fundamental technical, visual that I'm seeing there.
Just zoom out quickly to the weekly chart here, just because I notice it's a bit of a fresh IPO. So what I'm going to do, and this is again another Brian Shannonism who gets constant shout outs on this. Yeah, you've got a long way to go there. So often these anchored VWAP from IPO prices can be resistance, but man, it's a $5.89 stock. That anchored VWAP's at 10. If you're still holding your entire position then and it reverses from there, then
Uh,
you got to double. What else do you want? But nice looking potential accumulation phase. It stopped. This was very weak for a very long time, but it stopped going down at the end of 2023 and has been going sideways since then. So I don't know, looks okay. So we do have one more, and this was our first. This is the one that you comment was our first ever, and that's SVRA. So let's start here on a daily chart. So these guys are pharmaceutical, and anytime I see pharmaceutical preparation, manufacturing, I get a little bit of worry. They're doing some sort of respiratory disease. I don't really know much about, but that's always my first scare. Is you
yeah, as
have
a
to,
swing trader, I stay away, yeah,
yeah,
from the pharmaceutical stuff because they're always one FDA denial or pipeline ruin away from disaster,
yeah,
20, 30% gap overnight. Zoom in a little bit and let me ponder this. We have kind of a pinch play, but substitute the 200-day moving average for the base. And so the last chart was a pretty good looking chart, but I'm here to be honest with you, and that's why we want to do that.
mhm,
The daily has got kind of a pinch play happening there. Okay,
yeah,
it
it broke
it
down.
was pushed back down, broke it, and it's given it away. And now you've got that crossover. Is that a 10 in the blue? Is
Yep,
that a 10
that's a 10,
SMA?
and then that's
Okay,
the 200 now.
yeah, so that's crossed over below the 200 quickly, and now it's excuse me, now it's grabbing a hold of the price. Your first order of business is you need to get that price back above the 10 and the 20 as quickly as possible because right now the tide is pushing down on your price, and you could be one more leg lower any day now. So be careful.
Yeah, I look at this again, the pharmaceutical prep, that always worries me. If we go at I always start, because I'm a little bit more of a longer term trader than Steve. I take a look at charts like this. And yeah, on the monthly chart, right, stopped going down in 2020, but just been slugging sideways ever since. So I would want to see the breakout really occur in this name before I would be interested in it at all. If we zoom in, right, we've got all of this price action overhead. So I just look at trades like that and just say there's just too much. There's too much up here. There's too many bag holders on the monthly chart. There's too many bag holders on the daily chart. By bag holders, I just mean these people, they're underwater and they got to sell. So at some point, if you do get a
That's very
pop,
head and shouldery. That's very head
yeah,
and shouldering too.
yeah, if you get this breakdown from this neckline, I don't know. It doesn't look good to me. But again, the part of these things with these pharmaceutical companies is they're a little bit lotto ticket, right? It's you have to understand and believe in what they do, but at the same time, you have to look at things like do they have enough cash to hold themselves? And like Steve said, they come out, the FDA goes, no way, this thing's a $2 stock again, right? Now the opposite could happen. The FDA could come out and say whatever they do is fantastic and it's great, and you get that gap up. So for me, it's if you're going to play these things, you just have to play them incredibly small. Maybe you take an Nvidia or something very big where a bad day for Nvidia would be 5 to 10% down, right? A bad day for this could be 80, 90% down. So you just have to look at those things and say, okay, I'm more okay trading names that aren't going to disappear overnight way bigger than I am little small guys like this.
I would say it's at a very critical juncture here based on all those things that Michael just drew. The neckline, the head and shoulders behind it, broke the 200.
Yeah.
It's probably do or die time. You're going to figure out what you want to do with that thing.
Yeah. And if you like, we're going behind the headlines. He didn't write anything. He wrote a little bit about the headlines, but if he just said, "Hey, can you review that?" So nothing really about the company. When I go into the pharmaceutical, usually when I see people ask me about pharmaceuticals, it's because they like something about the drug that they're manufacturing. It's okay to like that, and it's okay to keep a stock like this on a watch list and say, if then I'm going to do this, right? It's just because you may like what the company is doing doesn't mean you need to own it now, right? That's kind of been a theme throughout. If you like AI and Nvidia, doesn't mean you need to own it right now. You can wait for a pullback, or you can wait for some sort of setup. Same with DJT, same with these Ozempic kind of names, right? Wait for your moment.
I have a good example, and it's MindMed. Like you say, you like the product. I love the product, but you're in and I'm out. That's the funny part.
Yeah.
You're in for the long haul. Now I have another stock I'm in for the long haul because I love the product. But for MindMed, it's just more of a trade around for me. And right now, these spiky spikes that can't get back above the 50 are bothering me.
Well, see, so and I'll go my plan with MindMed right here, is just anchored VWAP plays, and then
I'll be
obviously
buying it
the
down there.
that I drew
I'll be
out,
buying it
right?
down there.
So at this, I bought a
Yep.
little bit right here, and then yes, you're right. I don't like that it can't break this area, but it's funny if you draw a anchored VWAP there, that's also that as well. So I'm
Ooh,
looking at this
pinch.
one saying if it breaks that anchored VWAP to the downside, I gotta go. Right? I gotta move on
Yep.
to
Yep.
something else. If it breaks that anchored VWAP to the upside, I'm probably going to add to the position. So just, we look at these things differently, but I think the important thing for the audience is that the theme is the same. Doesn't we can like I like the company. I think that if they can solve anxiety and depression, I think that's a huge thing and get people off some of these drugs that I think are way more harmful that don't seem to do a good job at all. Great. But the price has to agree, right? If we start
Yeah.
breaking down and we break down these lows, then I got to go. If they break out these highs, I can add. So there's nothing wrong with
Yeah.
taking the story to summarize, but then just have a plan around that story to make sure that you're in it when it's moving and you're out it and in something else when it's not going your way.
Yeah, I'm right there with you on the story of everything about that. It's just I can't stand fighting the charts. I just have to be going with the flow. Before we go, do
Hmm.
you still have my 15-minute setup with the pinch
I can grab that.
play
Yeah.
in the 15? You have to
So,
reset it, huh?
well, just
That
so that
sucks.
people know, so we'll use the 10. We'll add the 10 SMA. Then I'm going to add the 130 because that was the 15-minute chart. And then we'll just set another color. Good little walkthrough trade ideas here. And then go boom. And then away we go. So what are we looking
So
at
on the
here?
15-minute, we're going to walk out, or I say, leave the podcast here with the DJT on the 15. It's fighting. It's fighting back. We don't know how it's going to resolve. Like we said, I talked about that pinch play, but it's a fighter, just like the man himself. It's a fighter.
The what I'll say, just looking at this technically, is right. You've got a pretty kind of line in the sand area right here. It corresponds with this low right here, and then that low right there. That's where they tried to buy it. So, and it's funny that lines up exactly with
Yep.
the anchored
The
VWAP from
pinch
those two. So,
and the pinch.
and the pinch. So, right, what's that?
There's a lot going on right here.
What are we looking at?
49,
Yeah, let's say 48, 50,
48,
49.
70,
I would say
48,
that's
60.
your area. If we can get close above that, maybe. If not, look out below. This name,
Well, I'm still long, and I'm using that wick as my low. So on the open there, that's my stop below that.
yeah, we talked about that the other day with
Yeah.
SMR, didn't we? That you
Hmm.
wait that
Yeah.
first
Letting it.
15
Uh huh.
minutes, you let it go. We should actually, I guess, follow up on this just to tap ourselves in the back a little bit. We did have a nice little breakout in SMR. It looks like it's pulling back into the 10. So,
Oof. I might be setting an alert for that one at the 10.
yeah,
Contrarian entries.
I
I'm
sold a
going to do
little
that right
bit
now,
on that
actually.
play, but like I talked
Ooh,
about, I
I like
want to
that entry.
hold this a bunch of this for the long run. So
Oh,
I sold a little bit there, and then that helps me kind of stay patient and hold the rest. And if it,
780.
so for
Sorry.
me, if
I'm
we
getting all
close the
excited.
if we close the gap and then start to bounce from there, I may add
Yeah.
in that little bit that I took out. But as soon as we gapped up and we ran and we closed right here, I'm like, I gotta just ring the register on some, because like we talked about with our viewers, that just gives me the freedom to say, listen, we were in from six-ish, give or take. sold a little bit at 9. Like what else do I want? Now I can hold the rest and say if SMR goes bankrupt, I'll only lose a little bit of money. If I get out at 6, then I still make money the around the area that we sold. If it rips and it goes to 10 or whatever, then great. And I can put myself in that situation and it just lets me, deal with these wiggles a little bit better. So,
I just set an alert to buy. I want in at that price, 780.
yeah,
I
well, if
want to
you can,
establish a new position there.
yeah, you've got the gap fill and you've got the 10 SMA right there.
But
So,
look at it, pull up the 15 while you still have it. I'm looking at that. I'm saying, no, it just kind of failed a pinch and it's under pressure. So I'm not interested here. I'd be, a hoper if we were doing it here on the 15 because it's underneath that pinch. You see
yeah,
that? So I'm watching it. I'm stalking it on the daily at the gap fill, but right now I'm not. I'd be a hoper and a guesser to jump in right now.
I do love, and I know we're going over old stocks and stuff like that now, but I think it's great just to hear the thought process because even though, right, I'm using anchored VWAPs and I'm trading for the longer term and you're trading for the shorter term, you're using moving averages, the thought process always remains the same. It's if this, then this, if this, then this. It's
Yeah.
never, what do you think of this stock? Oh, I think it's good and I'm going to buy it here. It's always, I like this thing if it does this thing, and then if it does this other thing, I'm going to
Target,
get out, right?
worst case possible. What is it?
And
What's
if
the target? What's the worst case possible?
Right, so it's I find as soon as traders get that concept of essentially you want to think like a computer. Computer has an input and then it has an output and then it has another input and then and as soon as you do that as a trader and say I'm going to wait for this to occur and this to occur and this to occur and then I'm going to take my trade, then I think it makes life so much more easy because then you're less emotionally attached. You're just waiting for that thing to occur. So for Steve, it's probably on a 15-minute chart. You probably want to see it reclaim maybe this 5 SMA, maybe a pinch in the other direction happens next week. Something like that. That'd be fantastic. For me, it's simply I want to see it test this level. And if I get a hammer candle or some sort of bullish engulfing or some sort of strong closing candle off of this zone, then that's where I get involved. So neither of these are right, neither of these are wrong. It's just kind of what works for us. So listen, I say it every time. If you guys have made it, 37 minutes in at this point, I think we've earned a little bit of a like, a retweet, a share, whatever that is. The
And a couple
algorithm
more
likes
chart
it.
requests.
Couple more chart requests. We'll do those as well. I certainly enjoy these. I look forward to these every Friday. I know there's a lot of people that are starting to look forward to it out on the weekend. Um, so let's all we ask is you share it around. That helps grow Trade Ideas presence to other people and helps to get the word out there so that they're not buying Zach's upgrades on Nvidia at 1500. They're waiting for something that makes some kind of sense after that. So, all right, everyone. Thank you all for coming by. Talk to you next week.
See you.